So one of the reasons we've had such price resilience is the fact that there's been an underpinning of stock, or more to the point, a lack of stock in a lot of areas. But we can finally see now that that is starting to change a little bit, Ben.
Yeah, we are. So we've got a little chart up here, again, thanks to our good friends at CoreLogic. And what we're looking at here is the arrival of the spring listings. Okay, so what we've seen in terms of listings, they're 3.2% higher year on year. So 12 months rolling average, 3.2% higher. But then we start to think, well, what does that mean sort of over a more medium term? So over a 5 year period, they're 8.8% higher than the 5 year rolling average. So when we look at this particular chart, we'll explain it to our audio audience as well, the things that we're looking for is what's the arrival of new listings and then what are the total listings available to us. So we've seen since the 18th of August to the 22nd of September that there's arrival of 5.4% of new stock into the Sydney market, and that's up from negative 2.8%, 2.9% prior to that. So that's been a nice arrival of new stock. Melbourne's very similar, up 12.2% of new stock compared to only 6.3% of new stock arriving in August. And that's now meant that overall stock is around 12.8% higher overall. So that's a marketplace where we are starting to see. Remember, supply is the enemy of capital growth. So that's what we're seeing there in terms of higher supply. And so it's a great buying market. If you're looking for choice, there's plenty of choice out there. Brisbane's also, had a good spike of new arrivals. So 9.1% of new stock arriving into Brisbane in the last 4 weeks. And but even though that's arrived, the absorption's pretty strong. So there's only 0.8% higher. So you can still see that market's doing very well in absorbing that new stock. And that's why you get capital growth. And then this is the story of Perth. And this is why Perth has still potentially got a little bit more momentum in it. And that is because there's been a 2.4% increase in the last 4 weeks of new stock arriving, but still, in terms of where it was 12 months ago, it's still 18.3% below that line. Now, one could argue, well, was that line too high originally because it had been an underperforming market? Well, you could probably argue that if we're only in the start of the cycle, but because we've been in a long period of the cycle, it's still telling me that there is buyer appetite in that particular market. And I suspect that that's being led by both owner occupier and investor now. So that's underpinning that particular story. And so that's a healthy story. In terms of Hobart, off a very low base, we can see that like Hobart has 333 new properties arrive for a total of 1,500 properties for sale. Now, for context, compare that to our biggest market of Sydney, it has 22,750 properties available for sale. And compare that to Melbourne, has 31,510 properties. So it's all relative. And that's also relative about the level of demand they get. If you actually have a look at Tasmania, they have got negative population growth at the moment. And that's always a risk when you've got an aging population down there and you've got slowing economy down there, then ultimately people are going to move to look for the jobs. And, that's also an underlying risk that I put in terms of a watch factor for Melbourne and Victoria, as that debt level gets high and the government has to basically lay off thousands upon thousands of workers and slow the economy down because we've got to repay debt. Where does that leave the job story? And so that is a watch and act based on that. At the moment, we're seeing still strong overall population growth into Victoria and especially into Melbourne. It's a very dynamic international city and lots of multiculturalism. So that bodes well for, the sentiment for confidence around property prices. But there is this underlying economic concern that I have for that particular market in the short term. Then we go, Bryce.
There's a lesson there too for our listeners around the voting machine and the weighing machine that we talk about, and I sort of hinted at the Mindset Minute because you can see from if you are able to look at this, you can see that there is a real rebound in demand. And to your point around Hobart and Tasmania with that population, there was a period of time where everyone's saying let's be in Hobart, and if you were a part of the voting machine and you were part of a short-term cycle, you could have done really well. But now is where, to quote Warren Buffett, the when the tide goes out, you see who's been swimming naked. The big question is, how sustainable was that growth over? If you're part of our philosophy, which is buy and hold for the long term, some of that gain is now being given back, and then the big question is what is going to be driving the any positive growth in that market in particular going forward. Now, there are pockets where people have done really well. We've had people come on the podcast and talk about that, but we are talking as a general rule where we're chasing, economic activity, lifestyle drivers, status throughout the eyes of our frameworks. I think there's a really good learning point there around, okay, there was a moment where Hobart was in the sun, but now it's all about that long-term sustainability and returning back to some of those fundamentals.
I love what you've just said there, Bryce. And if I can tell that story in terms of the state of Western Australia, exactly the same story. Running a surplus, passes the lifestyle, beautiful weather, great climate. You've got a government that's got it's moving and diversifying away from mining more and more. It's got a competitive advantage in terms of its cost of energy and cost of gas. It's got a competitive advantage in terms of its access up into Asia. It's going to obviously be the central home for where our sub fleet is going to be based in terms of our nuclear sub. So there is a lot of diversification going on, and so that will attract workers into that particular market. So to your point, I see a 20, if well governed, and they govern for a growing economy, then Perth potentially could have a golden era of a change, because it's just got so many advantages. Because obviously its mining is also very diversified. It's got gold, it's got rare earths, it's got obviously iron ore, it's got the gas reserves, which is the transition fuel for the transition around climate change. So it actually has a lot of aces attached to itself. So that's why I'm reasonably confident about its medium to long term, because a lot of people talked about it, well, it's a one-trick pony. If mining's underground, if mining goes down, everything suffers. Now, yes, a lot of industry is connected to that, but this is their opportunity. This is their chance to also be a high worth, high social, high living. All of those things can bode well for a broader dynamic economy in that particular market. So if I was the premier of that state, I'd be sitting there saying, great, I've got a strong economy, I've got surplus, so I can start investing in critical infrastructure, build another big hospital like the main hospital that was recently built. I would be going all out in terms of building some of that great infrastructure that lets that city set up for the next 20 or 30 years. So that's an example that I would have. On the alternative, we're obviously seeing Darwin. It's in an economic decline. Its economy is underperforming significantly. There are a lot of restrictions and regulations around attracting new investment into that. So the new government going into Darwin is going to be very positive in terms of everything's about growing the economy and reducing restrictions and red tape and environmental red tape, so they can attract future investment into that. They've just announced a very, very significant first home buyers grant and incentive to get people buying and living in Darwin. So that in itself, means that they've got an opportunity, but they're coming from a long way back. And that's been a product of that economic growth and attracting new people in there. And that's why it's underperformed. And what Bryce showed you earlier, it peaked many, many years ago in terms of its higher price. But during the 2000 to 2010 period, Darwin was the best performing capital city in Australia, if my memory serves me correctly. And then you've got Canberra. It's a government town, high wages. Whenever the government's paying, everything costs more and everything can be charged out more. But we always say it's not a place for us to invest, because they charge a 3 times premium for the holding cost and land tax. So we wouldn't be encouraging any investment, because all you're doing in that particular market is giving your money to the government. So it's not a market that we would say bodes well for passive long-term income off those particular properties. And that gives you a pretty good summary in terms of what that story looks like.